Traders at Axis Bank expect the bearish sentiment in the bond market to persist as participants fund their auction winnings from Monday. For the T-bill side, same is expected as liquidity tightens. Anuoluwapo Obipehin, Treasury Team Member at Axis Bank, joins me now for more market updates. Anu, thank you so much for joining us on the show today. Let's talk about the highlights of market activities, the interplay we've seen so far since Monday's bond auction, allotment, subscription rates. What are the figures here?
Hi, David. Thank you very much for having me. I'm very happy to be here. Yeah. So like you said, on Monday, we saw the week start off with a bond auction by the DMO. So they offered a total of 360 billion naira. And by the close of the auction, we saw that they had sold about 434 billion, which is about 90% from the oversubscribed value of 445 billion. As the market had expected, we saw an hike in the stop rates across all four maturities, namely the 2029, 2033, 2038, and finally the 2053 maturity. For the 2029s, we saw the stop rate increase by 110 basis points to 16%. For the 2033, it stopped at 17%. For the 2038, it was 17.5%. And finally, for the 2053, we saw the stop rate close at 18%.
Yes.
So so I'm just going to give a brief overview on the secondary market following the auction. So following the auction, we've seen the market trade on a bearish note as market players, like you rightfully said, try to shore up their liquidity in a bid to meet the funding for the bond auction, which will be happening today. So we saw the 30-year on-the-run bond trade as high as 18.05%, which is 5 basis points higher than the stop rate of 18%. Likewise, this was the same for the 15-year on-the-run bond, which currently traded at as high as 17.55% as well.
Going forward now, the question is how are investors leaning across the T-bills and bond curve, especially with the current depressed levels of liquidity? And I would also like to have your take on the significant drop we saw at the NAFEM rate, looking at the fall of the Naira against the greenback.
Okay. Yeah, so starting out with the investors' perception on the fixed income market. So we've seen them trade more towards the active on-the-run bonds and bills, namely the 30-year and 50-year, and also the 1-year Treasury bills. So we see that because there has been increased liquidity in these particular bonds coming from the auctions that happened very recently, and they're all currently trading at very elevated rates. So the market are trending more towards the longer end.
Yes, we definitely have our fingers crossed as well, because we're all expecting inflation data to be released by the National Bureau of Statistics any moment from now, and also the shift towards orthodoxy by the CBN is also generating quite the response. For so many, this is what should be, but we'll continue to wait and see, and the next line of action that will come, especially from today's data release. Thank you so much for speaking with us today, and it's been a pleasure talking to you. That was Anuoluwapo Obipehin, Treasury Team Member at Axis Bank.